Hello and welcome to the special year-end program of This China on CCTV International. I'm Zhou Yue in Beijing. Yesterday we took a brief look back at China's economic development in 2008, as well as the current financial crisis that is weighing on the domestic economy. In the second part of our one-year-end special, we'll look at what challenges lie ahead in 2009 and as how China can ensure a healthy and stable economic growth. And joining me now in the studio to offer more insights is Professor Huo Deming from Peking University. Welcome, Professor Huo. Obviously, 2008 has been a very unique year for many reasons. First and foremost, the financial crisis that turned the world upside down, and many people are concerned and affected. What do you think, Mr. Huo, lies ahead for all of us?
For the world as a whole, I think the government, every country's government realized the financial crisis is such an important scale, so that I believe the financial crisis itself is bottomed out, but the economic crisis on which industries which will be affected most, we're not sure yet. But I believe that if there's nothing more in terms of economic turmoils, then in the middle of 2009, we should expect everything will quiet down, and then things will go back to normal.
Many analysts are saying that maybe there is some uncertainties still lying ahead for the world economy.
Yes.
What are those uncertainties we're talking about?
The world economy is indeed, it is uncertain in a sense that what it used to be might not last in the future. What does that mean? We can imagine that in the previous years that the United States played a probably dominant role in terms of international exchange. U.S. dollar is the most important currencies, but I believe that in the future, all countries in the world will contemplate that possibilities, whether there should be a different monetary agreement or whether renminbi should play a more aggressive roles, and those are the things we're considering, and that might pose a certain uncertainty.
Okay. And to ensure the economic growth, the Chinese government has actually introduced a raft of measures, starting with the 4 trillion yuan stimulus package.
The global financial crisis faces us with new and serious challenges. We will never underestimate its impact. But what is more important is that we must properly cope with it and take it as an opportunity to adjust our economic structure, enhance development levels, and deepen reforms.
The State Council approved at the beginning of November a massive 4 trillion yuan stimulus package to be spent over the next 2 years. The dramatic move also included 10 measures to boost domestic demand, such as enhancing infrastructure development nationwide and speeding up affordable housing projects.
But the 4 trillion yuan package is meant for the next 2 years, which means it's a short-term stimulant. Therefore, what we expect is that it's not going to have a long-lasting effect, but it's going to be producing certain short-term effect in a sense, I believe, for 2009 to 2010, that the economic growth, the GDP growth rate in China will be at least 8%. And after all, when we think about 2 trillion yuan per year in terms of GDP, 25 trillion, that will be about 8%. For that 8% short-term stimulant, in order to produce 8% economic GDP growth per annual, that should be sufficient.
What if think about the distribution of the 4 trillion yuan, because a large part of it will be used on infrastructure buildings?
Yes. I noticed that in this 4 trillion yuan stimulant package, that a lot are designed for infrastructures, for instance, railroad, and we should expect that on the investment side, and that's not on the consumption side. And therefore, in terms of GDP growth, that 4 trillion yuan package is going to be very effective. But in terms of consumption side, we shall wait and see.
Then we should talk about consumption a little bit. Japan has actually given every citizen 12,000 yen to boost their spending. One of the leading economists, Robert Mundell, who's a Nobel laureate, said that China should take similar measures to boost domestic demand. What do you think the possibility and feasibility of this?
A lot of domestic Chinese economists have discussed Mundell's proposal, and I shall say I share I share a certain sympathy with Robert Mundell, but in terms of stimulation, in terms of consumption demand, this kind of consumption coupons he suggested is not going to make a dent in economic growth in terms of long run.
Normally, talking about faith, normally in a situation like economic recession, people will tend to save rather than spend.
Yes.
What kind of measures can we be looking at to boost the consumption?
In the recession years, I mean, that's most difficult for the government to boost consumption demand. But it's also in the recession years, it's the best time to look at the past. What we are doing is not sufficient. What we have been doing is not sufficient to boost consumption demand, and that's the time to adjust the institutional factors. So I think in the old days, when we look at our prosperous years, we're sort of ignoring those institutional factors. But in the recession years, it's the best time to reevaluate and prepare ourselves to go ahead.
What kind of institutional problems are we talking about? Are we talking about a revenue tax cut, or talking about other measures?
Tax cut or spending that are
social net
really meant for short run. But for the social safety net, retirement pensions, health care, education, those are the three most important issues that faced every Chinese families. How you're going to prepare them for the faith. Now, if I can imagine that in my old days, all my pension were taken care of, and especially healthcare has somebody, the government can provide me with some of it, and of course I can save for some, then of course I'll be more willing to spend now.
But with more investment on those welfare projects, the construction of social safety net, the Chinese government is facing a shortage of revenue income. So, do you think Chinese government will run into budget deficit next year, and how can it handle it?
In the year 2006, 2007, the Chinese government is really running a fiscal surplus. That's good message. But for 2008 and 2009, especially for the next couple of years, there's indeed such a worry that we should be concerned about. But then again, the institutional side is something that I always mention. You can always adjust the central versus local government's tax package or spending patterns so that the central government fiscal deficit, even if it's going to occur, that could be spread out in the next several years. So let's not worry too much about the fiscal deficit, as we should be focusing on how to spend it in the most effective way.
But is it reasonable for us to imagine that China should run a deficit-run economy like the U.S.?
I doubt it. A statement like that, whether we should be Keynesians or monetarists, whether you should be pro-deficit or pro-surplus, I doubt it. In a transition, especially developing countries like China, we should not worry about a budget deficit or surplus. Well, then we should worry about the money, whether it's built into a most efficient freeways, railroad constructions, or how we split the central versus domestic local governments. And in such a big picture, and that surplus or deficit will resolve by itself.
Okay. To counter the financial tsunami and spur domestic spending, China has slashed its key interest rates 5 times since September. As we can remember, China was raising interest rates during the first half of 2008 to fight inflation. Now, before we continue our discussions, let's take a brief look at this shift from tight to moderately easy monetary policy.
The People's Bank of China announced at the beginning of 2008 that it would continue to adopt a tight monetary policy. The policy was to combat surging commodity prices and heated domestic investment. At that time, the benchmark lending rate stood at 7.47%, a 10-year high after 6 consecutive rate hikes in 2007. The Consumer Price Index growth hit 8.7%, a 12-year high in February. It was caused by the accumulated effect of a snowstorm in southern China, rising wages, surging food prices, and energy costs. The tight monetary policy seemed to work well. The CPI fell quickly by the middle of the year and the housing market softened. Analysts say that monetary policy was once again shown to be good at cooling down an economy.